Alhamdulillah wa salatu wa salamu ala rasulillah wa ala alihi wa sahbihi wa man walah. Amma ba'd. Sound. Testing. Oh, there we go. Alhamdulillah wa salatu wa salamu ala rasulillah wa ala alihi wa sahbihi wa man walah. Amma ba'd. Jazakumullahu khairan for your patience. So to get into this slide, again, I apologize, the print is very small. We've broken down the different types of accounts that Canadians have access to. You have your TFSA, your RRSP, and your RESP, and your RDSP. The TFSA is your tax-free savings account. You become eligible for this account after the age of 18. And the way this account works is that you are allocated an amount every year that builds up over a period of time. And over that period of time, that is how much money you can put into this account. So once you turn 18, they allocate approximately $5,000 to $6,000 every year thereafter, and that is how much money you can put into this account to invest. So from the beginning of this account up until now, if you were 18 when the account started, then it's approximately about $73,000 or so that you're able to put into this account to invest. The good thing about this account is that whatever income is generated in this account, you're allowed to take tax-free. So unlike your salary that you have to pay taxes on, any money that you make within this account, when you withdraw it, there's no taxes on it whatsoever. There's no taxes on it whatsoever. So this is a very good investment vehicle because you can withdraw from it tax-free. Once you withdraw from this money, then you actually lose the threshold or the cap on that account until the following year. So for example, right now, if you're allowed $73,000, you've built it up to $100,000, let's say. So you withdraw that $100,000 in 2022, that's all tax-free, but you cannot put money back into this account up and until January of 2023. You can't put money back into this account until January of 2023. If you try to put money back into this account, you'll be heavily penalized. So this has a threshold with regards to your age, and that's how you start building up the amount. The second account is your registered retirement savings plan. This is directly related to your level of income, and then based upon your level of income, they take a set percentage, which I think is 17% or 19%, and then they give you an allocation based upon that. So that is how much you can put into this account. The benefit of this is that it is tax deferred. So unlike the other account, which was tax-free, this is tax deferred. So when you put money into this account, the amount of money that you put into this account, you can actually claim on your income tax return for this year, and it lowers your income tax bracket. But then when you start to withdraw this money, based upon your level of income at that time, you will pay your taxes at that time. So that is the benefit of this account and how it works. The RESP, Registered Education Savings Plan. This is with regards to your children. So from the day that they're born, you can create an investment account for them, and any money that grows into this account can continue to grow, and again, it is tax deferred. You will only pay tax upon withdrawal, and the assumption is because your children will be students at that time and they won't have high levels of income, they're not going to be paying much tax on it anyways. And this is a great avenue for education as well, because there's a whole other discussion on, are we allowed to take loans for education, like OSAP, for those of you that go to university. What is the ruling on OSAP, right? That's a separate discussion that we're not going to get into, but what is the alternative to that? The alternative to that is that as parents, we start investing on behalf of our children so that when it is time to go to university, then they have this money that they can use with the assumption that they're not earning much money at that time, so they're not paying much tax on this money that they're withdrawing as well. The RDSP is the Registered Disability Savings Plan. So if there's a child that has disabilities, the parent can invest on behalf of that child, and the government of Canada actually matches some of your percentage. And this is something I forgot to mention for the RESP. The government of Canada will match up to 20%, up to a maximum of $500 per year per child for the money that you put into this account. So if you contribute $2,500, the government of Canada will contribute $500, and this continues to grow that way as well. Similarly with the RDSP, then the government of Canada matches a certain amount. I'm not familiar with the details of what those amounts are, but if you speak to a financial advisor, they can let you know how that works. So these are the different accounts that everyone has access to. And then the last account is the non-registered account, which is a regular investment account. that has no government matching. You're fully taxed on it. There is no deferring. And it's the account that you use as a last resort. That once you've maximized all of your other accounts, then that is the account that you invest in. So these are the different accounts that you have access to. Now when you compare these accounts, the TFSA, the RESP, and the RRSP and RESP, these are some of the things that you need to look at. So annually, you're allocated about $6,000. Your lifetime, if you had it from the beginning, is about $81,500. Sorry, I said $73,000, but it's $81,500. Your RRSP, approximately will be $29,210, or 18% of your gross income, whichever is lower. So whatever is lower, and you have up until the age of 71 to invest in this. And similarly with the RESP, the annual maximum limit that you can contribute is $2,500. So that's where you get the $500 benefit from. And over a lifetime, you can only contribute $50,000 towards your child's income per a child. So this is a comparison of the different accounts. How does taxation work on all of these? The TFSA, you're taxed on US dividends. The RRSP, you're taxed upon withdrawals. Unregistered, you're taxed upon everything. What do the different terms mean? We've explained them already, the difference between tax-free, tax-deferred, and taxable accounts. Now, this is a discussion that always comes up. Should you invest in your TFSA first? Should you invest in your RRSP? What should you do first? I like this chart because it sort of simplifies it for you. So again, you can download this slide and you can study it and you can apply it to your situation. The simple answer is that there is no simple answer. A lot of it is circumstance dependent, and based upon your circumstance, that is what you should decide if you should go into your TFSA or your RRSP. We'll do questions after, inshallah. So you can download the slide and take a look at it. Now, the discussion on cryptocurrency. So going back to that fundamental principle that everything is halal until proven haram, that applies to cryptocurrency as well. So in order for cryptocurrency to be halal, there are three things that you want to look at. That it serves a function. What are functions that a cryptocurrency can serve? It can serve like a medium of exchange. So Bitcoin would be considered a medium of exchange. Or it can serve as a technology like smart contracts, something like Ethereum. So those are the primary functions where it either serves as a medium of exchange or as a technology. Then number two, it should be as non-inflationary as possible. It's a very technical term, but I'll explain it as simple as possible. That if you have the ability to create an unlimited amount of something, the more you create of it, the less valuable that thing becomes. So the Sharia came to create non-inflationary currency in a simplistic understanding. So for those of you that have Bitcoin or invest in Bitcoin, then you know that there's only 21 million Bitcoin that will ever be created. So that is how Bitcoin is non-inflationary. For something like Ethereum, they have a burn rate, that they burn Ethereum regularly to make sure that it stays non-inflationary to a certain degree. And then the third and last thing is that it shouldn't be a Ponzi scheme, where when I buy a particular cryptocurrency and I try to recruit everyone to buy a cryptocurrency, as you buy it, I generate revenue and income from your purchases. That is not allowed Islamically, and that happens with certain cryptocurrencies. So these are the three general rules that you want to apply to cryptocurrencies. This is taken from Sheikh Joe Bradford, who's an expert in the field. The simplistic way, again, like we showed Zoya and Islamically as the apps, there's actually a website called Islamic Finance Guru /crypto. If you go to their website, they look at the top 50 cryptocurrencies by market capitalization and give you a ruling on them. So as long as you're investing in the major cryptos, then they will tell you which ones are halal and which ones are haram. And this is what we have over here. So Islamic Finance Guru /crypto, it tells you all of the top 50 by their names, their ticker symbols, is it halal or not, and then gives you access to their white papers so that you can get more information about them. Now, these are different resources that are available to people. And I'll share this piece of advice with you, that particularly when it comes to financial literacy, like any other field, like any other subject, is about how much time you invest studying and reading about it. There's this famous conversation that Warren Buffett had with a university student, where the university student asked, if I have $10,000, what should I invest in? And Warren Buffett responded that before you invest $10,000 in the stock market, invest $10,000 in your education. learn first. That's what you need to do, right? Al-ilmu qabla al-qawli wal-amal, as we always say. So these are important resources that you can use. Sheikh Joe Bradford is a Medina graduate, bachelor's and master's, and he's done a lot of work in Islamic finance. You have Mufti Faraz Adam based out of the UK. He has a lot of papers that he's done, a lot of presentations that he's done, and many mentors. As a website, it's not catered towards Muslims specifically, but in terms of learning how to budget, learning how to save, and those sort of tools, these are all available. You can use these resources online for free. The conclusion that I want to share with all of you, that the dunya is very, very tempting. We have to recognize that the dunya is very, very tempting. The dunya tells us, earn more, buy more, be more extravagant, be more lavish. But that all comes at a cost. It comes at the cost of your closeness to Allah subhanahu wa ta'ala. It comes at a cost of sacrificing your deen. And that's what we want to say, that never prioritize your dunya over your akhirah. And don't compromise on your principles ever. The dunya is not worth it, your wealth is not worth it, if you're willing to sacrifice your akhirah for the sake of your dunya. And this is why the Prophet ﷺ tells us that whoever prioritizes their akhirah over the dunya, Allah subhanahu wa ta'ala rectifies their dunya and their akhirah. But whoever prioritizes their dunya over their akhirah will end up losing both, Number two, before you even start investing, learn how to budget, learn how to save. Getting rich is not something that happens overnight. And that is not what we're trying to achieve. What we're trying to achieve are believers with high levels of iman that have wealth, that are able to spend on the causes of the ummah. That is what we're trying to achieve. And that can only take place if you have discipline and you learn how to budget and you learn how to save. Then once you have money, that is where you learn to invest early and invest often. There's no such thing as timing the market. Inshallah, Nadeem and I will be discussing this shortly. Just stay in the market as long as you can, and as long as you don't need that money right away, stay within the market and it will grow up until an opportunity comes where you can spend that money on something beneficial. Number four, learn and surround yourself with the right people. So continue to grow, continue to learn, invest in your education, but also surround yourself with the right people. You know, there's this statement that there should never be a time where you're the smartest person in the room. So particularly with financial literacy, if you apply that, there should never be a time where you are the most financially literate person in the room unless you're in the position of educating people, right? Then that's a different case scenario. But you always want to try to surround yourself with the best people in every field, and that is how you learn, that is how you grow, and that is how you benefit from other people's benefits, and you learn to avoid the mistakes that they made. And then last but not least, perhaps the most important rule, remember Allah, and Allah subhanahu wa ta'ala will remember you. There is no such thing as a risk without Allah subhanahu wa ta'ala. So as long as you make Allah subhanahu wa ta'ala a priority, then Allah subhanahu wa ta'ala will take care of you. Because remember, there's this delusion that wealth brings about happiness. That's not the case. Allah's Messenger sallallahu alaihi wasallam, he tells us that true wealth is ghina'un nafs, is the wealth of the soul. It is to be content, it is to be satisfied with whatever Allah subhanahu wa ta'ala has given you. Because a person can have a large amount of wealth, but if they do not have qana'ah, if they do not have the ability to be content, there's no amount of wealth that will make them content and satisfied. So that is something that's very important to keep in mind. So always remember Allah subhanahu wa ta'ala, prioritize what Allah subhanahu wa ta'ala has made halal and pursue it. Stay away from that which Allah subhanahu wa ta'ala has prohibited and avoid it as much as possible. And Allah subhanahu wa ta'ala knows best. Again, this presentation is for informational purposes only and educational purposes. It is not to be considered financial advice. Always contact and consult a professional. So we're going to move on to phase number 2 of this presentation, which is just a very brief introduction to Sharia portfolio by my dear friend and brother Nadeem Mian. He has been in the finance industry for over 20 years. He is with Sharia Portfolio, and he's one of the main men at Sharia Portfolio that makes the decisions in terms of where to invest and what to invest in. He is also a chartered financial analyst, which is like a very difficult and highly sought position in the financial world. So I'd like to invite my dear brother Nadeem Mian to come up, inshallah, and he's going to share a quick and brief presentation with you. Then we're going to have an informal discussion followed by the Q&A section. So inshallah, Nadeem, you can take my chair and I will be taking this one, inshallah.
Jazakallah khair, Sh.Navaid. That's going to be a tough act to follow. Very impressive. The only thing that impresses me more about Sh.Navaid is his video game capabilities.
Allahu Akbar.
I'm going to share a quick story just to kind of, break down some, just to make things a little bit casual.
Flip this on, please.
Sorry?
Flip it on.
Okay.
That's for the.
All right.
Sorry, what's that?
Yeah, okay. So me and Sh.Navaid go back like when we were kids. I think we grew up in the same city in Montreal, and I first met Sh.Navaid at a Mina Bazaar, which is kind of like a mela of some sort. And at that time, we had a video game stall, and I thought I was the best NHL 94 player. It was 94, right?
It was 94.
Yeah.
But I
So-
don't expect anyone here to know what that is.
But you know what? It's basically EA Sports NHL, right? I'm sure some of you guys have played this game, and I thought I was the best. But lo and behold, Brother Navaid came along and just schooled me, and he's the greatest NHL 94 player ever. You probably are. You probably are still great right now.
What an accolade to have.
So with that, Jazakallah khair. I would like to thank the Abu Huraira Center for inviting me here to, say a few words and introduce my firm Sharia Portfolio Canada. Again, my name is Nadeem Mia. I am the portfolio manager for Sharia Portfolio. I'm just going to say a few words, just talk about who we are, what we do, why we do it, things of that sort. And I guess the purpose also will be, with all the information that we've given you tonight, I'm sure there's a lot of questions, and we'll kind of dive into that, and I think that's really what we're looking forward to. So with that, I do have to give this quick disclaimer that nothing that I say is construed as financial advice. We obviously encourage you to speak to your financial professionals. Everybody has different financial objectives, and they're in different stages. That's why we kind of have to shoot at this disclaimer. So and this is my information. I'll put this up later so you guys can see. But our office is actually based in Oakville. I'm originally from Montreal, but I've been in Toronto for about 20 years now. Yeah. So who is Sharia Portfolio? Just a quick story, on the firm itself. The parent company is actually based in the U.S. and has been around since 2003. It was founded by our CEO, Sh.Navaid Aziz. At that time, he was mostly just catering to family and friends, specializing in Sharia compliant investing. Subsequently, alhamdulillah, the company demand started to grow. It was mainly, again, targeting the Muslim American market. We got registered into 26 states, and we, in the U.S., were registered with the SEC, which is the Securities Exchange Commission. Those are the regulators that overlook, some of these financial firms that are giving investment advice. Then alhamdulillah, time grew on, and what I will say is that I've been in the industry 20 years, and when I first started in the industry, I will say that I was targeting a lot of Muslims and Pakistanis, because that is my background, and what I came to find out at the time, the demographics were very different. My parents, who immigrated in the 70s, they might have they had wealth, but they did not understand the market. They didn't understand funds and things of that sort. So it was a little bit foreign to them, and they had that conception that this is, not halal, and this is gambling and things of that sort. So you had that issue to deal with 20 years ago. And my generation at that time, we were just focused in on getting married, having kids, and trying to save up to buy a house. So we did not have the wealth, although we might have had some of the financial literacy more than, at least, than our parents did. But fast forward today, 20 years later, and this is why Sharia Portfolio in the U.S. started to expand into Canada, is because the demographics are right. And alhamdulillah, we've come to a point as a community that we now can demand this. And I worked at a number of banks. I've worked at HSBC, RBC, and I'm not knocking my former employers at all. But the fact of the matter is, this is not what this is not their cup of tea. It could be, part of that could be financial, part of that could be the fact that it's philosophical. They don't want to get into anything faith-based or something, to give any perception out there. And again, I'm speaking from experience because I've dealt with these banks. Having said that, in 2019, I joined Sharia Portfolio. Alhamdulillah, my path and the firm's path crossed. They were looking at Canada. They needed somebody, and it was a marriage. We did the nikah, and everything so far has been, alhamdulillah, great. So what we do, and again, these are some of our sister companies that we have. Some of you know the ETFs, like Sh.Navaid mentioned. PUS, the SPRE, that's kind of a sister company of ours that has these funds. These funds trade on the New York Stock Exchange, and they've been around for about over 2-3 years now. So we do have that as a separate product. But what we do, what Sharia Portfolio Canada is, it is mainly a service company, and so we offer professionally managed investment solutions that basically help Muslims reach their financial objectives, but making sure that it doesn't, compromise their Islamic values. And call it a mission statement, whatever you want, but that's really it. And when people ask, who are we, what do we do? Again, I'm leading by service. This is, there's two things that we value in this dunya: our health, the well-being of our health, and also the well-being of our wealth. And when it comes to our health, of course, it's good to know, like Sh.Navaid mentioned, you have to educate yourself. It's good to know what is good for you and what is bad for your body. At the same time, when it comes to your wealth, you should educate yourself. But at the same time, when you go to the doctors for your health, we obviously have we're obviously have the bias that you should also have an advisor, even though you're educated. And some people might not need an advisor, but we think that as time goes on, we think, we do add value as an advisor. So that is one of the things that we do. And not one of the things, that is the main thing that we do, is that we are advisors. We are currently registered in Ontario, Quebec, Alberta, and British Columbia. Inshallah, our plan is to kind of, go across the country, but for the time being, as the business grows, we hopefully will get in more provinces. But for the time being, I think, GTA has served us well, and there's a lot to do here in our community, and so we'll start with that. We are a firm that's dedicated to Sharia compliant investing. We don't offer any of the products. We understand that there are other companies out there, the traditional companies, that might have a fund or two out there, and that's fine. And I also know some brothers who are doing this at other firms, and as personally, I encourage that. I make dua that they have success, but at the same time, this is all we do. We are a believer in Islamic finance. We believe in our community and the growth. And the saying that I like to say is that people put their faith in their money and us, and we truly value that. Now, just some logistics here. We are partnered with Fidelity Investments. For some of you who might not know who or what Fidelity is, they're actually the third largest asset manager in the world. So what that means is that Fidelity just simply serves as our custodian, bank, and broker. They do all the back office. So, and the reason why I'm pointing this out is because we do get a lot of questions. Well, where's my money going? Who's it being held by? How do I know Sharia Portfolio is what? Well, the fact of the matter is, all the accounts, all the assets, every back office stuff is done through Fidelity, and that's where we provide our client portal and things of that sort. So just to kind of give you a sense that we are partnered up with a reputable global financial institution to just ensure that the assets are held in a good safekeeping. So just trying to dive into two of the services. As I mentioned, our job is to get to know our clients, figure out what their objectives are. Some people are in the early stages of their life where they're just, they're far from retirement, so they want to grow their capital. There are others that are near retirement and want to preserve that capital and start planning for retirement. There are, educational objectives for their kids. There's Hajj objectives. There's all sorts of objectives, right? So what we try to do is obviously get an understanding as far as, who the client is. And it's kind of like, again, it's kind of like walking into a doctor's office. We're not just going to give you the prescription. We are trying to get a sense of who, what you're looking for, and then ultimately, give you that prescription. And that prescription is Sharia compliant. So we do have two offerings. We have what an access and what I call an active service. So this is where The solution is, you are basically saying, okay, you know what, here's my money. After the full discussion, we actively manage your portfolio, and what that means is that we are actually, buying and selling the investments, the stocks, the funds that are in the portfolio. We first get an understanding of who you are, what your objectives are, and things of that sort. We show you the recommendation, we show you the investment strategy, but ultimately, when it comes down to managing, we are managing that portfolio for you, on a discretionary basis. And that means that we are implementing our investment thesis, our outlook. We'll invest into certain areas where we feel there's opportunity. We'll, stay away from certain areas where we think there's risk, things like that. And then the other offering that we have is passive, which we are using our ETF models to build a portfolio. And I think these are ideal. That's an ideal service for new investors. They're great for RESP accounts. Anybody that's looking to kind of just get started and on there. I like to think that it's kind of like building the foundation. Let me start with something here and just build it. So the ETFs, as Sh.Navaid might have showed you on one of his slides. Those are some of the ETFs that we use in the portfolio, and again, we manage that for you. It's not as active. In other words, we're not buying and trading, we're not day trading, but we will rebalance the portfolio for you. We will review the account for you on an annual basis, and ultimately, kind of provide you that financial advice. At the end of the day, it's not always about the product. It's also about questions like, should I contribute to my TFSA? Should I do my RSP? Things of that sort. And last but not least, we are insured up to $1 million by what's called a CIPF. It's the Canadian Investment Protection Fund. Some of you know CDIC. That's what the bank has. Every account is protected up to $100,000. The CIPF is just simply saying that if the firm were to go insolvent, how much of my fund is protected. It's basically up to $1 million of the market value of your account, right? So it's not a guaranteed amount, but it is the guaranteed market value of your account. So just maybe I'll skip through this because I know you've heard Sh.Navaid talk about IFE. That is the standard that we follow, we use a algorithmic platform that screens all our investments. It's not just stocks. We also get into fixed income, and for that we use Sukuk, a Sukuk fund, which I'll be happy to answer. But basically, I'm not going to dive into Sukuk because maybe we'll do it in the Q&A. But Sukuks are basically Sharia compliant fixed income. It's an alternative to traditional bonds. But in any event, we subscribe to IFE. We do on our website. You will find third-party Sharia audits on the funds that we use and the portfolio service that we provide. Right now in the U.S. we have Raqaba is a third-party Sharia auditor. They've kind of give us the audit that we're not just saying we're Sharia. They actually will look at some of our dealings and say, okay, you know what? Yes, here's the thing. So it's not like kind of like a tax audit, but a Sharia audit, right? And then similarly in Canada we have IFAB, that is a local body that's given us a Sharia audit. Again, I'm not going to dwell too much on this because you've already seen this slide before, but that's what we do. And same thing when it comes to IFE guidelines. We follow, like I said, like Sh.Navaid kind of reiterated, it's that whole 5% non-permissible income. I guess the example that I like to use is Walmart, because Walmart is actually not compliant, right? So like Walmart, for example, is a stock that is not Sharia compliant. I know everyone probably goes there, but the fact of the matter is Walmart makes too much money, selling non-permissible products. So, they're actually the largest weapon seller in the U.S., and that I think that has something to do with why they failed. So that's an ideal example of it's not just the eye test, right? The eye test is my own kids can figure out that you don't buy shares of Budweiser. But it's more, detail oriented, such as that. So we don't just simply, we are going through the numbers, and we are using a software platform that helps us devise that. And same thing, we have there are financial ratios centered around debt that companies must use. And again, we review our holdings every quarter. That's when, you know, typically companies release their earnings, so financials do tend to change at that point. So we keep an eye on that. So, you know, just to kind of conclude here, you know, we do have an app. You can definitely download it. We encourage you. All clients can get access to view their account online. We also have a zakat calculator as well, and I guess that's that's one of the things that you can say we do more than your traditional advisor, maybe at another, you know, investment firm. If anybody's dealing with an advisor at a bank, or, you know, I'm not going to make fun of you, but what I am going to say is that I guess we know our clients. We understand that stuff like zakat and purification is something, whereas, you know, other non-Muslim firms might not be aware of. So again, we don't provide zakat calculations. But we will give you ratios to help you calculate. And we do webinars on, especially during Ramadan. We do webinars on zakat. We'll bring in a scholar that will go through, you know, zakat calculation on investments and then how that's calculated, because. And so what we do is we help with that calculation by providing ratios, and then ultimately the client can go around and say, okay, this is what I need to give, and so forth. So with that, I guess I'm going to bring Sh.Navaid back in, and we'll get into the second part or the third part of this.
So what I'm actually thinking is, let's start off with questions on the floor, and then we'll do some back and forth, inshallah.
Yeah, all right.
So I know there was a brother that had a question. Where did he go? Yes, brother. Bismillah.
It's not actually a question, it's a comment that I have about the RRSP.
Yes.
One of the main benefits is that if you have money there in this account and you want to withdraw it towards a house or an apartment that you want to buy, this is actually 100% tax-free.
Yeah.
So whatever money you have saved over 20 years, 10 years, whatever, if you want to withdraw it from the RRSP, it's totally tax-free if you buy with it a house.
Yeah, just want to add to, but you do have to pay that back in 15 years.
Yeah.
So yeah, you can withdraw from it. It is tax-free, but, you know, the government is expecting you to pay it back within, in 15 years.
And there's a limit of 35,000.
Yeah, and the limit is 35,000.
Yeah.
Yeah.
So can I comment on that? So Jazakallah khair. We'll try to repeat all the questions so that the sisters can hear as well. So the brother's comment was about the RRSP, on how you can use your RRSP for different purposes, not just for savings itself. So he mentioned that how you're able to withdraw money for the sake of purchasing a new house. And I believe it has to be your first home, right?
Yeah, first home.
It has to be your first home, and you have to pay that money back within 15 years, and it's a limit of $35,000 per spouse that you can withdraw the money. You can also use this for continuing your education. So if you're an adult that wants to go back to university, you can use it for your own education as well. And I'll mention a third thing that a lot of people don't know. I know it's applicable in Alberta. Research needs to be done if it's applicable here, or maybe Nadeem can even tell me if it is. But what they've allowed in Alberta with certain banks is that if your RRSP amount is greater than $100,000, you can actually use that money to self-mortgage your house, to buy a house on mortgage, and you pay yourself interest. So whatever the prime rate is, that's what you have to pay the minimum back to yourself with.
Oh.
Is there such a thing like that in Ontario?
No, I haven't heard that yet.
Okay, so I'll share the link with you later on. The Canadian Western Bank in Alberta does that. RBC and these other banks used to do that as well. So for those of us that are trying to avoid taking a mortgage, if you've built up your RSP to an amount over $100,000 in Alberta, again, very Alberta exclusive, you can actually mortgage yourself the money and pay it back to yourself. And this interest that's being charged in Islam, you can't pay interest to yourself. Like, there's no concept of paying interest to yourself. So even though you are theoretically on paper paying interest, Islamically it's not considered interest. So that would be a third alternative to a benefit in terms of what we can benefit from the RSP. So Jazakallah khair for sharing that, inshallah.
You can repeat that. You said you can mortgage yourself. What do you mean that?
So if you haven't, so the brother's question is, what do I mean about the self-mortgaging RSP? So in Alberta, I don't know about Ontario, but in the province of Alberta, Calgary, Edmonton, those areas, if you have more than $100,000 in your RRSP account, they allow you to withdraw that money and purchase your first house with it. And when you take that money, you have to pay that money back over an X number of years, I don't remember how many years it is, with prime rate. So prime rate is whatever the government of Canada decides as an interest rate. You have to pay your account back, this is your own account, not the bank, your own account back with that prime rate. So Islamically, that is something that would be allowed because it's not considered interest. Interest is between two different parties. But if I borrow money from my savings account, put it into my checking account, and I pay back more, that's not considered riba in Islam.
And how about the house cost $400,000?
Excellent. So that's why I'm saying you have to have more than 100,000. So if you have 400,000, it'll work if your house costs that much. And then also you can look at different alternatives. You know, I know now is not the time to talk about purchasing a house in Ontario, because Ontario is a completely different ballgame than Alberta. Like in Alberta, without an exaggeration, mashallah, tabarakallah, in a city like Edmonton, in a city like Calgary, you can buy a 5-bedroom house, brand new, custom built, for $700,000. Over here, I've heard that you can barely rent like a bathroom or something like that amount. So I know that's grossly exaggerated, but you understand the exaggeration. That the market here is very, very different. So in other parts of the country, this sort of tool, for those of us that are trying to stay away from riba, is a very good tool to use, bi'idhnillahi ta'ala. Jazakumullah khair. For the volunteers, is there a way to gather questions from the sisters' side? I'm not sure how that works. So if the volunteers can let us know how we can gather questions from the sisters. So sisters, gather your questions and you can send them forward. That'd be greatly appreciated. We have a second question from our brother over here. Bismillah.
Yeah, Bismillah. What's the difference between this and the other companies that, like Ansar, which I invested sometime quite a long ago, but there was also issues, some money once you invested there, you will hear rumors, so everybody's trying to stay away from that. Yeah. So if you can highlight that, that
I can answer. So, Jazakallah khair for the, yeah, sure. So the question was about what is the difference between something like Ansar co-op housing and say Sharia portfolio, right? So I'll answer that question by answering what we do, right? And then I'll kind of give you a high-level understanding of what I know about Ansar, and we can go from there. So, like Sharia, like we're fiduciaries, meaning to say we don't get paid on the product, we get paid on our service. We charge you an account management fee, whether that portfolio has Apple stock or Google stock, it doesn't matter, right? Whether we have this fund or that fund, doesn't matter. We charge you an account management fee. And our portfolios are built on mainly two things, stocks and ETFs, exchange traded funds. So exchange traded funds are funds that are kind of like mutual funds, but they trade on the exchange, right? And what that means is that these funds are funds that have a pool of other securities that are in there. Now, most of them could be stocks, they could be sukuk, they could be real estate companies, but either which way, these are funds that are trading on an exchange, and those exchanges are very liquid. So in our case, I say this to all our clients, is that, and I know there's been some issues with the Ansar on this. If hypothetically, let's just say you open an account today and you invested with us today, whether it's in your RSP account or whatever account, and you called me in a month from now and said, look, I've had an emergency, I need this money back, right? We can liquidate the portfolio for you on that day, and your funds are basically back in your bank account within 2 to 3 business days. So as far as the value of that fund is going, it's going to obviously, it could be better, it could be worse, but the thing is, the liquidity part is what I'm emphasizing, is that you have access to your money relatively quick. Now, with Ansar, I believe it's more of a private investment. Private investment means that it's not necessarily regulated. Whereas with us, when we're giving advice, we're heavily regulated by the securities commissions here. In other words, if you had let's just say if we're advisors, you're a client, and for whatever reason, if you had a complaint about us, you can actually take it to the regulators, and at that point, you have an official body that gets involved and says, listen, you know what, we're going to fine this firm and the blah, 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 right? So that's the thing, is that we are regulated, the Ansar co-op. I'm not saying it's good or bad, but what I do know that it is a private investment that means automatically that it's not liquid. Liquid meaning if you wanted your funds, that's not a guarantee that you're going to get it right away. There could be all sorts of conditions attached to it, right? Okay, hopefully I answered your question. Yeah. And the last thing I'll say is, Ansar is obviously centered around, real estate.
People who
Yeah.
is more or less like community.
Yeah,
stuff,
yeah,
like that.
yeah.
But I heard a lot of rumors, so the things, just running away from river,
Yeah.
That's
no,
the main
yeah,
thing,
yeah.
So, they wouldn't give you a lot of discussion. They have some meetings like that, and that I didn't see diversity about it.
Yeah.
So sometimes, you understand.
Yeah, no, I understand, yeah.
Okay. Thank you
Okay.
very much.
Sorry.
We'll get to you in a second, sir. Just 1 second. Something that I believe that's very important to highlight. Before you invest your money with any professional advisor, there's a couple of things that you want to look at. Number one is the reputation. Anyone that you give your money to, verify their information. They should be around for a long period of time before you give them your money. You can't just be, hey, we started up yesterday, give us your money. That's not how the way it should work. So reputation is very, very important in this industry because there has been a lot of mismanagement and that trust needs to be re-earned. Number two is the Sharia compliancy. Always verify who the Sharia compliancy board is, what are the rules and regulations that they have in place, and make sure that actually exists. And then number three, this is the part that hardly anyone ever talks about, the customer service experience with that entity. One of the biggest disasters, and let's talk about halal restaurants for a second. If you go to a non-Muslim restaurant, and I'm generalizing here, if there is a dispute, generally speaking, they'll value what the customer has to say. Generally speaking, when you go to a halal restaurant, it's like, you're wrong, get out of here, that's your problem. And that's sort of translated into a lot of halal Muslim industries. So what I want to say is, always look at reviews. So if people are saying that, hey, I've been trying to call so-and-so organization and trying to get my money back, they're ignoring my calls now. But when they needed money from me, they were calling me, 3 times a day. That's a big red flag that you shouldn't be giving their money. We should not tolerate abuse by Muslim organizations just because they're Muslim, right? So those three things are very, very important.
I learned a lot of money through investment, and finally, but I became so devoted to the reality that, well, I'm running or I'm not catching up, but just leave it like that time.
Yeah.
Don't waste too much time. So since we didn't know much about, but
Yeah.
alhamdulillah, our brothers are coming into masjid. We are the one who are seeking, but you are coming here to advise us, because things have changed so much during that time, and the
Yeah.
timing is,
Mhm.
So everything is changing, So you have to have somebody, like, when you have a problem, you have to have a lawyer,
Yeah.
Yeah, you have to know what's your right,
Of course.
Okay,
Exactly.
so please just establish and say, I have my lawyer, so there will be.
Jazakallah khair. Just 1 second, I know you were next. Akhi Muhammad, is there a way to get questions from the sisters, inshallah? If you can take care of that?
Yes, but maybe you can talk about options.
Options?
All right.
Okay, khalas. So let's do the order, and then when we have a break, then we'll do options at that time. Go ahead, brother, you were next.
Sheikh, I wanted to ask one question for Naveen and one for you.
For sure.
Naveen, I just wanted to follow up with this uncle about, let's talk about Manzil and AFA Finance.
So just as a general rule, I think we should stay away from mentioning specific names. So if you can ask general questions, that's the best thing to do.
Yeah.
So say, what do you think about an organization that does X, Y, and Z without mentioning their name? So you can ask about whatever issue you're having without mentioning the name. That's the best thing to
So
do.
cat's already out of the bag.
No, but we've learned from that experience.
Yeah.
That's something that we
Okay.
should try to avoid.
Yeah.
inshallah.
So halal RESP, halal RRSP. Some companies are offering, what does that mean?
Okay, I'll answer
And
that,
the
yeah.
question for Sheikh Navaid is that you started your talk saying that 9 to 5, it's not the only way to get money.
Yeah.
But people who are coming from 9 to 5 families, they don't encourage even their kids to go to the other side. They say that the business is for them who are already into business. So if you go over there, you will be like failing, like you will fail. So how do I or someone overcome that attitude shift,
Of course. Jazakallah khair.
Yeah, so I'll answer the first question about the halal RSP and halal RESP. So the way you want to think about this, and I simplify it here, is this. RRSPs, TFSAs, RESPs, these are just pots, okay? Pots. what you put into the pot is what makes it halal or haram, just like cooking. So ultimately what makes an RSP halal or haram is the investment that you put in. And in this case, you know, when you're saying halal RSP, your RSP has to, is only halal if the investments in the RSP that you choose or your advisor puts together for you are Sharia compliant, right? So that's the thing. I mean, number one, of course, you can do it yourself. Like, you know, Sh.Navaid showed us, you know, there are some apps that can help you. You can use some of the ETFs, that's great. If you feel that, you know what, I'd rather, you know, not leave this in the hands of myself and trust a professional, that's, you know, you can definitely contact, you know, somebody like us and we can help you build that, right? So I think, you know, as far as the account itself goes, it's how it's invested, how it's made up. I think as far as the stuff such as the government giving you 20%, I think, you know, there's nothing wrong with that. I think all the scholars have agreed that, you know, that's a permissible contribution. I think that's yours.
That's it? You're done?
Well, yeah.
Okay,
Second.
Yeah, so in simple, I agree with what said. Those are just vehicles and means, and what you put into it was what makes it halal and haram. And that's what they're trying to do, is provide a halal version or product, in comparison to whereas if you were to go to a conventional bank, then the conventional bank would not be able to give you a halal RESP or a halal RRSP. Now, with regards to your question about the shifting of the mindset in terms of being unilaterally focused on the salary as opposed to other streams of income, this is something that, you know, you have to logically approach. Either I live my whole entire life with one stream of income and I don't get beyond that, and even that is going to have a cap with it in a field. So for example, if you're working as an engineer, what's the most you're going to end up making? You reach the highest position of the biggest company, 300,000, 350,000, there's going to be a cap there, right? Similarly in every single field. And if you're okay with that, stick with your salary, keep working hard with your salary. But if you feel that there's more that you want to achieve in your life and you have lofty and ambitious goals, then based upon that, you have to increase your revenue through other streams of income. So that logical approach to, okay, this is where I'm going to go, and this is the vehicle that I have with the salary, but that can only take me so far. If I want to go beyond that, it necessitates that I have those other streams of income. So always focus on that. Have a financial plan, what I'm trying to achieve, how am I going to get there, what vehicles am I going to use to get there. That's all very, very important. And I think that's where the biggest mind shift is going to take place. Once you put pen to paper, these are my goals, this is how much money I need, and I can't do it with one salary alone. So I need to start up a business, I need to employ other people, I need to invest, because those are the vehicles that are available to me.
Just want to add, one of the quadrants was investing.
Yeah.
So you know, your investments can actually you know, supply you with income as well. And you know, again, everybody's different. There are people that are much more comfortable with just being employed and saving the capital, investing that, and you know, after you invest that, you can even supplement your income with that. So I just wanted to make sure that it's not just, we were focusing on 3 quadrants. There is a 4th one, that's investing.
I did mention that.
Oh, did you? Sorry, my bad.
No worries. Our brother in the back, go ahead. Yeah.
Awesome.
Okay, and your second question? Excellent. Jazakallah khair. Thank you so much. So the first question with regards to zakat on investments, there's a couple of things that you need to have information on before this question can be answered. So depending on the type of account that you're holding this investment in is how you will also calculate your zakat. So an account that has no penalties and restrictions is going to be the easiest one to calculate. The one that does have penalties and restrictions like your RRSP, like your RESP, then the scholars suggest, and again with a difference of opinion, you subtract the amount of penalty, the amount of tax, and then based upon that you would give your zakat based upon that amount. So in terms of unrealized gains, yes, there would be zakat based upon the value of the asset at the time of calculating your zakat. But that's also account dependent. So keep that in mind. With regards to your second question, the methodology of fatwa is how I'm going to frame your question. And I think this is very important for everyone to understand that one of the things we've highlighted in the seminar is فَاسْأَلُوا أَهْلَ الذِّكْرِ إِن كُنتُمْ لَا تَعْلَمُونَ, that ask the people of knowledge if you do not know. And the reason why we highlight this is because it is inevitable that we're all going to meet Allah subhanahu wa ta'ala. And one of the things that we will be asked about, as we've learned, is how we earned our money and how we spent it. Now, when you ask a scholar and the scholar gives you an answer and you follow that scholar, then on the day of judgment you have a defense, saying that I followed the scholar and he was reputable, he was trustworthy, we know him for knowledge. His defense will be valid in the sight of Allah subhanahu wa ta'ala. But when we do things of our own accord, even if the answer is right, we've shot ourselves in the foot by taking the wrong methodology, because we've gone against the Quranic injunction of asking the people of knowledge. So that's the first thing that we want to do, is that particularly when it comes to financial matters, and all aspects of our lives, if you're unsure about something, seek the people of knowledge. Now this goes on to a more practical level. What does that look like? What we're trying to avoid within the Sharia is what we call fatwa shopping, where people go and look for the easiest and most comfortable answer. So how do you avoid that? Is by finding one scholar within your community that you trust, that you have access to, that you ask all of your questions to, and for the sake of consistency, you listen to what he has to say. If you do not have access to a scholar within your community, then the closest scholar that you have access to, that you can regularly interact with. And the consistency in those fatwa is what will create balance in your life. So you'll find within different madahib, they have different principles, and even though those principles may be different, at the end of the day, their fiqh balances out because they are countermeasures within the madhab. So I think that's very important to understand. Now to actually get to your question, that if you invested with the intention that this is something halal, then there's nothing you have to do. But if you invested knowing that it is haram, then that is something that you have to let go of, right? Unless the person that you took your fatwa from, or the person that you sought, that said originally it was haram and now they've changed it to halal, then that would be the exception to point number 2, where you would be allowed to keep that wealth at that time. Is that seem clear? And Allah subhanahu wa ta'ala knows best. You have questions from the sisters? Do you want to add something?
I just wanted to add on the whole idea of, do we tax unrealized gains on zakat? We give portfolios, we do give a zakatable asset ratio. I don't have the ratio memorized in my head, but and again, we lead with a webinar, because zakat can be very complicated and people have very specific questions. But again, we do provide that information to our clients, and then at the end of the day, of course, Allah knows best, and you can take that information and then decide for yourself or speak to your scholar. Yes.
You text it to me? Oh, perfect. Okay, so questions from the sisters. We have 2 of them so far. For Muslim women, regardless of their economic status, how much of their time should they spend trying to learn and participate in wealth making? If they are married or caretakers and receive income from their husbands, should they be investing that? I love this question so much. Yes. The second question is, what is the Islamic ruling on purchasing or selling NFTs, if there are any yet? Excellent. So let's start off with the first question, which is, for Muslim women, how much time should they spend studying? Let's start off with this. We have a general principle in fiqh that says that everything that applies to men applies to women, unless there's a specific evidence that shows that it is exclusive to one gender or the other. Right? So that is the general principle in fiqh. So when Allah subhanahu wa ta'ala says, go out and seek your rizq, that is general, and I do not know of any evidence that says that seeking rizq is specific to men and not inclusive of women. So that's number 1. So the amount of time that you spend is halal and it's completely up to you. So you spend the amount of time with regards to how important it is and how much of a priority you want to make it in your life. Number 2 is, if they are married or caretakers and they receive money from their husbands, should they be investing it? If you're saving that money, then yes, by all means invest that money with regard to the level of risk you should consult a financial advisor. They will advise you in terms of your goals and what you're trying to achieve and how much risk you can tolerate with those investments. So always do that. But I want to paint a third scenario that women don't often think of, and this is very important to highlight. Number one, la qadar Allah, may Allah subhanahu wa ta'ala bless and protect everyone here and protect our families. But imagine your spouse passes away. I want you to imagine that. If they're the sole breadwinner in this house, do you have access to the bank accounts? Do you have access to the investments accounts? Do you know what bills needs to be paid? So these are very important conversations that you need to have with your spouse, with this premise that, look, may Allah subhanahu wa ta'ala protect you and bless you, but if something was to happen to you, I want to make sure that our family can survive, right? So that's one element to it. Number two, in the case of a divorce, and may Allah subhanahu wa ta'ala bless and protect all of our marriages, but imagine a sister gets divorced and she's dedicated her whole life to being a homemaker, taking care of the kids and maintaining the home, and now she gets divorced, she hasn't gone back to work, she doesn't have an updated CV, she perhaps doesn't have updated skills. What is she going to do in that time? So if during this time she's already started investing, she's already ahead of the game. If she's already learned some basic financial literacy, she's already ahead of the game. And a part of Islam is prevention is better than cure, right? So rather than trying to catch up after the incident has happened, let's try to prevent that incident from happening in the first place. So that I think is very, very important. With regards to the second question on what is the ruling on purchasing and selling NFTs, then we established that principle that things are halal until proven haram. NFTs is just a complicated way of selling, blockchain, right? It's just it's code that is set out that can manifest itself as art, can manifest itself as contracts, can manifest itself as a variety of things. So as long as the contract is halal, as long as the code of what is being portrayed is halal, then the NFT remains halal. But if the coding is haram, or the product behind it is haram, or the art behind it is haram, then obviously that would make it haram as well. And Allah subhanahu wa ta'ala knows best. Go ahead.
This is for Sh.Navaid. So what we talked about earlier with the AOP standards and things similar to that, is there a strong difference of opinion in their permissibility? And if so, then a pure real estate play, would that be considered a more safer option to go for investment?
Excellent, Jazakallah khair. So the brother's question with regards to the OFI standard, and how do we navigate the difference of opinion with regards to these? Is there a more conservative approach? And then number two, with regards to real estate, is that a more practical / halal approach? Number one, we want to understand that with regards to fiqh, there is a difference of opinion, and this difference of opinion is considered a mercy in the ummah. So that's something that's very important to understand, that diversity of opinion, it creates flexibility within the Sharia, and it's not something that lay people should be fighting and arguing over. Leave that up to the scholars. As long as you followed a sound methodology that I explained earlier, you have a mufti that is trustworthy, follow whatever that mufti says, inshallah ta'ala, so that you're clear in the sight of Allah subhanahu wa ta'ala. Number two is that there's another principle to keep in mind, which is at-taqwa qabla al-fatwa, that the concept of God consciousness is closer and better than that of seeking a fatwa. So, but in your heart, you know what, that isn't settling well with me, and I don't feel comfortable with it. If you leave something for the sake of Allah subhanahu wa ta'ala, then that is something that is even better for you, which ties in perfectly to point number three, where is real estate, the halal and more conservative approach. I want Nadeem to comment on what he thinks on real estate, so we'll get to the practical side of that soon, so prepare your answer.
Okay.
But with regards to this, yes, it is more conservative, yes, you have more control over it, but real estate requires high amounts of capital, particularly in Ontario, and in fact, wherever you're going, is going to require higher amounts of capital. Number two, it requires maintenance. Number three is that this illusion of no risk being involved, I don't think is true. And I'll give you Alberta as an example. So if you bought a home in Calgary in 2008, up until 2021, you did not make money on that home. Because we had an oil and gas crisis and people evacuated their homes, the housing market in Calgary did not expand like it did in Toronto and British Columbia and these places. So you didn't make money. Whereas in a place like Toronto, if you bought a house in 2017, by 2021 you've doubled the value of your house, right? So you have to look at, it also depends where you are, the current economic climate, and those things need to be into perspective. Real estate is one option of the many other options that are there. And again, If you're truly trying to avoid even the disputable haram, you will find those non-disputed halal opportunities in GCC countries, in Malaysia, and in Indonesia as well. So just find a way to get access to those investments as well. And Allah subhanahu wa ta'ala knows best. Nadeem, give us an update on the housing market and what you think about real estate as an investment. And try to pitch ISPRE and how that works.
Sure. So, I mean, when we're talking about real estate, obviously most people are talking about like hard, you know, like a home, a land, whatever, and that again is private. And as Sh.Navaid mentioned, you know, that involves high amounts of capital. It requires your time to maintain it and all that other stuff. Ultimately, you know, for some of us who are homeowners, that is maybe your biggest investment that you have. So adding another real estate investment, is that the most smartest thing that you can do? I would tend to disagree because, again, real estate is not a liquid investment, right? And sometimes people need to realize that liquidity is sometimes, you know, very, very valuable. You need to have some, if God forbid something were to happen to you, the fact that you have, you know, 3 real estate properties, but you need the money, you can't just sell the house and do it, right? That's something to keep in mind. The other thing about real estate is this. I mean, of course, over the long term, yes, real estate has served most people well, and as Sh.Navaid mentioned, in some parts of the country that hasn't been the case. I think, you know, we've been in a period where interest rates have been extremely low for a very long time, and that's created, you know, a situation where people are just borrowing and buying property, renting it out, and making an investment. I think that that scheme is getting a little bit dry. So from that perspective, and we're starting to see that. We've seen, even in the GTA, we've seen you know, housing sales come down over 25%. That was actually the latest number. So we're starting to see the fact that rates being that low anymore all of a sudden are impacting demand. And so I would say, you know, real estate is definitely not a sure thing. Sometimes it's all about, you know, when you got in and what you bought. We obviously recommend having a diversified portfolio. And when we're talking about one's net worth, we are factoring in the fact that they might have a property or two, you know, to their balance sheet.
SPRE.
Oh, yeah, I mean, we do have a fund, SPRE, that invest into real estate. Now, these are companies that are in the business of real estate. And one of the things is that, you know, it's not just, it's like people think about real estate, it's mostly residential. But this fund, they have, I think it has about maybe 40 to 50 companies in there. And so you have a variety of companies from commercial, office, residential, like cellular towers. So it's giving you not just one area of real estate, it's giving you many areas of real estate, and it's also somewhat geographically diversified too. So it's not in one area of the market. It's mostly tilted towards the U.S., but there's some global, you know, exposure there as well. Yeah.
And one thing I'll add on that as well is that just like you would, if you had a property and you would collect a rent, you would get a good dividend from this fund as well. Go ahead.
This question is going to be, your service, like your service is pretty much compared to the banks, you know, in terms of your fees. Is that competitive or is it lower?
Jazakallah khair for the question. So the question the brother asked was, our fees, are they comparable to the bank? I would like to think so, yes. I mean, so we have, like I mentioned, we have 2 types of offerings, the Express, the ETF, which we do charge an account management fee of 50 basis points. So that's 0.5%, that's an annual rate that, you know, on the value of your portfolio.
So translate that into a practical number. So if they have
Yeah.
100,000, how much are they paying?
So on 100,000, my math is correct, I mean, that's, on 100,000, you're looking at $500, is that right?
No.
No?
Yeah, per year.
Yeah, $500 per year, right? Good. So, and then we charge that over the course of 12 months, right?
Selling and buying
So, what we do, there is a ticket charge. There's a commission of $15 per transaction. It's a flat fee. So that is the other expense. Yeah.
$50.
On 100,000? Yeah. $50?
You said 50 basis points, right?
Yeah. No. I think you're wrong.
100,000.
Yeah. Times.
0.005%.
Yeah. No. It's 0.5%.
0.5%?
Yeah.
9.5%.
Yeah. Yeah, 500, yeah. The kid is right. So, all right. And as far as the other, the active managed portfolio, yeah, for that, the fees are a little bit higher. They start at 1.5%. Now, mind you, the minimum for those accounts is also higher. The minimum account size for that would be 100,000, and we would charge 1.5% to manage that account. And it's tiered pricing, meaning to say if the account is more than 100,000, we would bring the fee down. So it starts off at 1.5%, and if let's just say you had a million plus, that fee would go down to 0.75.
Also, if it was 1.5%, it'd be 1,500.
Exactly. we got a mathematician in the crowd.
We can take one last question and we're going to break for Salah, inshallah.
All right.
Oh, you still have a question?
Okay.
Okay, Bismillah.
If you have, for example, if you're trying to get a credit card, for example, and you don't know what bank you're supposed to get from, because nowadays in Canada it is a multicultural country, meaning that there's a lot of different types of banks with different countries. How can you find, for example, to get a bank? How can you find out?
So, sorry, is your question about credit cards or about banks? Banks? Okay.
You want to repeat the question?
I don't think I understood it.
Okay, well, I'm just going to try to summarize the question that you have, right? I think what the young brother was asking is if you're going around looking for financial products, whether it's a credit card or something, how can you go to maybe a place where, let's just say, is more Muslim friendly? Is that what I'm trying? Okay. So I guess I'll tell you my story. When I was your age, I was born in Montreal, and at that age, we didn't have many halal butcher shops. We had maybe one, right? It was tough, right? Because sometimes you couldn't always go there. It was closed, this, that, whatever, right? So you had to buy kosher. And that's kind of what our financial industry is like right now, is that we don't have many options, right? Now, we might at this point be one of the few only halal financial shops around. There are other ones out there. But, inshallah, let's make dua that, with our success, we hope, our competitors and some of the other financial institutions like the mortgage providers, they can, have success as well. So that way, when you're my age, you won't have that question because you'll have options. I think what ends up happening, especially with these banks, is that unfortunately they all look at us as dollar signs, right? And they're looking at us and saying, well, you know what? This is a community, but we don't think we can make that much money on it, so we won't provide that. It's not worth it for us to do this. But ultimately, what ends up happening is, sometimes money speaks the language, and when they do see the fact that, listen, we can't ignore this demographic anymore, then you might start to see that happen.
Thank you, that was a great answer. So inshallah, we're going to conclude with that. Just a couple of announcements, inshallah. Announcement number one is that tomorrow we have our mental health seminar. So that's catering towards young people, family and friends. So please do show up at 7 p.m. We're going to start at 7 p.m. sharp. Inshallah, it's myself and another mental health professional. That's 7 p.m. right over here tomorrow. Number two, I know there's a lot of questions, but we do need to stop for Salat al-Isha. Nadeem and I will be available after Salat al-Isha, answering questions individually. So the official program is over, but Nadeem and I will be hanging around to answer your questions privately after the Salat al-Ta'ala. Nadeem has some cards and some brochures with you that you can grab on your way out as well. Jazakumullah khairan. So if we can get a brother to make the adhan, and we'll have the iqama right after. Subhanakallahumma bihamdik, ashhadu an la ilaha illa ant, astaghfiruka wa atubu ilayk. Sheikh Muhammad.